I'm Katherine, the CEO of Wentworth Resources. I'm shifting gears a little bit from some of the other presentations you've seen this evening, but I'll just talk you through a little bit of an overview of Wentworth and why I believe it's an exciting investment proposition. So just as a very brief overview, I'm just moving through our slide deck here. This is just an overview of our board and our management. We're a very small team at Wentworth. We're an AIM listed business. We're paying a dividend with a yield of around 7%. We currently trade at quite a significant discount to our net asset value, and the net asset value of our business is really underpinned by the reserves, the produced and producing reserves. We are a natural gas business in Tanzania, and we are producing. We're a profitable business, and we have reserves that underpin that valuation, and we're currently trading in terms of share price to a discount. We have a market cap of £42 million. We have cash in the bank of over $20 million. That's around £15 million. So you can see that just over a third of our valuation is in cash alone. So there's lots of running room, we believe, not only in the growth of our business, but also in the valuation, and why we believe it's a really good opportunity to look at this point. We have been able to build cash and have that robust balance sheet because of the nature of our business, which I'll talk about in a moment. We are very conscious as an energy business of the energy transition that we're all very, very cognizant of. We have incredibly strong ESG credentials. We've got one of the lowest carbon intensity per unit of our energy in the sector. We also have very strong governance and a very social, heavy social conscience and input into the local community, which again I'll come on to. So Wentworth is a very solid, profitable, robust business. Small, perfectly formed, de-risked on the fundamentals, with lots of opportunity for growth, and I think that's what makes this a really exciting story. As I say, here is our board, and I'm presenting to you tonight. As an overview, just for those of you who've not heard of Wentworth before, we are a leading domestic natural gas producer in Tanzania. Tanzania is an incredibly good place to do business. As I talk you through some of our fundamentals, I hope you'll be able to see that it's worked incredibly well for us as a jurisdiction. We have very strong government relations and very strong in-country stakeholder connections, and that's what really drives the fundamentals of this business. We have a gas field in southern Tanzania that is producing, has been producing now for 6 years, into a brand new natural gas infrastructure pipeline that goes from the southern part of Tanzania up to Dar es Salaam, the commercial capital. Natural gas is a really key part of the energy mix in Tanzania. It currently accounts for over 50% of the electricity generation in country. So whilst there's a good amount of energy generated from hydroelectric power, natural gas is by far the most key source at this point. We also see that as a critical part of the energy mix going forward. We are one of only 2 producing gas assets in country. Quite hard to believe sometimes. We all know a lot about the gas industry because of the recent news and obviously what we're experiencing here in the UK and Europe. But gas is critical in the developing world, particularly as we look to support a developing country in a lower carbon way as possible. And as I say, we're only one of 2 producing companies in Tanzania and providing that more than half of the power generation from gas. That's enabled us to create a very strong business financially, which is what we've done over the last few years. And we were pleased to report our interim results for the first half of the years with record results, the best financial and operational results we've ever been able to record here at Wentworth after a 10-year journey, and I've been part of that journey for 8 of those 10 years. Because of that financial robust platform, we have been able to instigate a dividend policy, which is now 2 years old. We started our dividend policy in September 2019, and we've increased that dividend at every single point since we started our policy. It is a progressive policy. We've stated that to the market, and we've absolutely demonstrated that we're committed to that, and we've been able to deliver. So when we announced our interim dividend with our results last month, we were able to announce a 10% increase period on period for that dividend, and we absolutely are committed to that going forward. So we would expect to see that dividend increase more and more over time. And what allows us to do that is really underpinned by that long-term fixed gas price contract that we put here. We have no debt. We have a very impressive asset that does require limited reinvestment at this stage. And so that low operational expense, the fixed gas price, the low operational cost of running the business, as well as not needing to reinvest significant capital back into the asset at this stage, really has provided such a generous return, and that's what's driving our dividend here, I say, of around 7%. And I mentioned earlier about our asset value. We have 90 BCF of 2P net reserves. That's producing and produced, so that's real gas that's tangible, and that's what's driving the point about being undervalued from a share price to net asset point. I mentioned our financial and operational highlights. This is our first half of this year overview. We have been able to successfully celebrate 5 years with no lost time incidents. That's really critical. For those of you who are aware of our industry, it absolutely goes to the heart of what we do, ensuring that whatever our operations do, that they are first and foremost safe and protective of all of our team working. So that's a really big milestone for us, because we've actually only been producing gas in material quantities into that new pipeline I mentioned a moment ago for those 5 years. So that really demonstrates that we are operating this business well, safely, and that again earns trust for us, not only with our shareholders and our other stakeholders, but really with the government of Tanzania. Mentioned the dividend, able to increase that by 10% from the first half of last year, and we've returned $5 million to shareholders just in the last 12 months, and we're looking for that to increase and grow over time. We've really been focused on driving top line as well as bottom line, so you can see there that 40% revenue growth, but also the focus on profitability. So we're trying to drive down costs, and to be able to say that we've increased EBITDAX by 75% from the first half of last year. It's really demonstrating the fiscal discipline that we have with this business, and just how profitable it can be. We're also delighted to be able to record production volumes. We've had the strongest first half that we've ever had, and able to show that 80 million cubic feet per day average. And again, that's driving all of these financial metrics in such a strong way. So that is where we are today, very strong, very well positioned. And what do we do with that? Well, we want to use that position to support Tanzania as it's looking forward to its economic growth of the country and its aspirations to be a key part of East Africa growth. And we are well positioned to take advantage of that. How do we take advantage of that? Well, we know that Tanzania are committed to delivering universal access. Currently, we think that there's around 30 to 40% of access to electricity in Tanzania, which is shockingly low when we sit here in the developed world. So there's a lot of running room to increase access, and that's before you look at the macro drivers, GDP growth of around 7% a year, very young growing population, one of the fastest growing population in sub-Saharan Africa, and that's all going to drive demand, and that's where we see this growth. So the chart here just shows a bit of a direction of travel since when we from when we really started producing meaningful quantities in 2016, and how we're increasing that over time. And we think that the trajectory is very much on that upward curve. We do have the ability, again, that's the demand side. What does the supply side look like? We were able to produce up to those 110 plus million cubic feet per day volumes that we talk about here in the dark purple box. That shows us and gives us confidence that the field and the wells are capable of supplying into that growing demand. Financial strength, I think I've touched on most of this. It really is just to show that as a small AIM business in this industry, we are different. We are profitable, we're returning capital to shareholders, we've got fiscal discipline, but we've also got the chance to deliver capital growth with a very exciting growth and outlooks. So I think for me, Wentworth has a lot of differentiating aspects, and also you can demonstrate that in this slide, which is just how far we've come. You know, we've repaid our debt, we've reduced costs, we've increased revenues, and that's allowed us to build up our cash here. So I think this really is designed to just show how we've come so far with this business, and we're just on the cusp of taking it to the next level. Talked about our dividend. For those of you who do a lot of investing, particularly in AIM, will know, and even more so in this sector, highly unusual to have such a sustained progressive dividend for a company our size. Really proud of it. It's a meaningful yield. You know, it's not 7%. It's a good, strong yield for our business, and also allows us the financial flexibility and liquidity to look at reinvesting and growth. So we believe that we've got the capital allocation right between returning capital to shareholders, but also ensuring that we've got a strong enough balance sheet to take a chance of any opportunities that come our way. I just would like to touch a few minutes on sustainability, because it's really, really critically important for all of us, but even more so in our industry. And actually, it's something that we take very seriously here at Wentworth, which I believe is also a differentiating factor. Part of our sustainability drive is absolutely just the core DNA of our business, but part of it also speaks to the fact that we have incredibly impressive blue chip institutional shareholders, which again for a company our size is quite unusual. So Fidelity, our largest shareholder, we then have Vitol as a strategic partnership long-term shareholder. We have AXA Framington, another major shareholder. So you can see that the way that we run the business, the way it's governed, the way we take sustainability and ESG seriously really speaks volumes for looking at how that's reflected tangibly in our shareholder base. We very much appreciate the institutional nature of our shareholding, but you know, I think it's very important to us as well that that's complemented by a strong retail base. We've been improving more and more the liquidity and the retail shareholding of Wentworth over the last few years, a conscious effort to make sure that the profile is spread broad, understand the importance, possibly the last presentation we just listened to, just how important the retail audience is in the market. So with the sustainability, you can see this, you know, we're an active member of the United Nations Global Compact, something we're very proud of. We do report all of our data. All of this can be found in our sustainability report on our website. So you can see that we actually do, rather than just say we do it, we actually demonstrate that we've got all of the data, and it's very easy to access for investors that need to see that. Particularly on the E. So you can see that we publish our Scope 1 and 2 emissions. We do it in line with SASB, which is a recognised international framework. We do have one of the lowest carbon intensities in our sector, and we are looking now at ways to reduce that even further. So our first priority was to be able to be transparent and disclose our emissions. Our next project is looking at ways to reduce that further. So all of this really wraps up into what next. What is our outlook? What are we looking forward to? And where do we drive value even more so from our current position? So we have that committed and sustainable dividend, and we think that's a differentiator for us from the investor community. We've had strong production, but we can still produce more even without any additional supply, without any additional capital expenditure. We have the supply capability to supply more into that demand as it materializes, and that's very exciting, because that's the low hanging fruit for us to move up to those higher volumes north of 100 million cubic feet per day on a sustained basis. And obviously some of the, you might see here on the right hand side, some of the drivers for that immediate demand increase are from some of these drivers, such as increasing the amount of industrial customers that we can connect, increasing the transmission network. So every day the transmission and distribution of that generation network is being added to, and that will really allow all of that power that comes to the other end of the pipeline to be evacuated around the country. So that's happening all of the time. We have Matuara power plant, which is a local power plant close to our gas fields, very important to us because it supports our local community. That will start to demand more power with the expansion of that plant. And the Kinyerezi 1 extension is a power plant in Dar es Salaam that will also demand more gas when that becomes commissioned and online. So we have a lot of line of sight on additional demand. We have current supply capability. We have ideas about to increase the supply above and beyond our existing capability. And we have a really good mix of good quality institutional shareholders and retail shareholders that have been very supportive. And I think that the outlook for us is very strong. Tanzania has recently undergone a leadership change with our president that has opened up a lot of discussions for international investment for new entrants. It's good for us too, for someone who's built up a 10-year track record and a lot of goodwill, a lot of relationships in Tanzania. So very exciting time. Very impressed and proud of our financial and operational achievements, and we really believe that we can use that to leverage growth and look to the next chapter for Wentworth.
Okay, thank you very much indeed, Katherine. Okay, lots of questions. First up, what's the lifespan of the existing gas fields?
Well, that's a good question. We think it has the ability to support production for decades. We actually have our current license term is to 2031. So we have another 10 years on our license, and that also applies to our existing gas sales contract. And our gas sales contract governs the price, the volume, all of the parts of our contract. But we believe that there's plenty of running room within the asset to extend way beyond that 2031. And we also have the ability to seek an extension to our license as well to demonstrate that the asset can perform beyond that.
When do you start that process? Is that in some years to come, or is that something you can do now?
It's an ongoing conversation, absolutely, and it's part of how do we optimize the asset? How do we look to reinvest? How do we look to spend significant capital back into the field, and how do we get assurances that we're able to recover the costs of that investment? And so it's a continual conversation with our stakeholders.
Okay, next up, do you have an exploration program, and if so, what are the costs related to that?
Well, that's great. I like that a lot because there's a huge amount of growth opportunity in Tanzania, and we're only scratching the surface. As I mentioned, we've got 30% access rate. We're looking for universal access by 2030, but you also got to combine that with a growing population. So there is not sufficient gas discovered today to support that future demand. What does that mean? That means that there has to be some additional exploration. We have to find more gas, and we're in a very gas-rich environment. There's a lot of offshore deep water gas that's been discovered. We've got our onshore gas that's been discovered. We've got a discovery next door to us in Rovuma. So absolutely, there will be and there should be exploration. It's about timing, and it's about trying to meet that inflection point between the demand and the supply. It is more expensive. It's pretty expensive to explore in this part of the world because it's less active. You don't have rig availability in the same way as you might in other more developed areas. So it does cost more, and you have to get the timing right. But there will be some exploration, and we've got a large acreage position in Manasseh Bay. We've got a cost recoverable PSA, which means every dollar we spend, we do recover over time. So absolutely, there will be a time and a place for additional exploration, in my view.
A few questions about would you see your future staying just in Tanzania then, or do you think you'd move to other markets?
Yeah, again, good question, and I do get asked that, and I think Tanzania is wonderful because we've got all of the opportunity. You've got infrastructure, you've got demand, you've got fixed gas price, you've got great stakeholder relations, you've now got a government that's very supportive. You've got a huge amount going for it, and I think we really will see the benefit of that. Having said that, it is still an undeveloped gas market, and it still has to take time to develop, and there's going to be a certain time frame that will happen. If there are opportunities to grow Wentworth with additional assets outside of Tanzania that make sense to our strategy, we would look at them. And when I say make sense to our strategy, I mean we're really good at gas, and we're really good at domestic gas to power. We're good at in-country stakeholder relationships. If there's something that fits that would be accretive to the existing business and to shareholders, we would consider it, or we would look at it.
Question around the fixed price contract, and I don't know if these things go together with the license. Assuming you have the license at the end of the fixed term contract, would you then be able to sell on the free market or at different prices, or would you have a further negotiation to extend the fixed price contract?
Not very easily. I mean, the way that the Tanzania Petroleum Act works, that governs this, the framework that governs this is really that our NOC, TPDC, are essentially our Tanzania National Oil Company, is the aggregator. So we are contracted to sell our gas to them, and they then go on to sell to individual customers. Why that's really important to us is because that allows Tanzania to also benefit from this, and that's how you make a successful business in this jurisdiction, in my view. The government you have to bring along as a genuine partner. I did actually thank you, Rowan, because this question has reminded me to just be explicit that we are the only onshore concession in Tanzania with the government as a partner, as a JV equity partner in our concession, and that's really important. That's why we get paid on time. That's why we have such good relationships. It's why we're fully aligned with the government, because you have to bring the government alongside as a partner. It's the right way to do business in an emerging market. So no, we wouldn't go off and necessarily sell our gas to new customers. That doesn't mean that we can't help support the government to find new customers and to negotiate agreements, which we can do and do.
Lovely. And final one from me, a little bit challenging, Katherine. The start you mentioned the discounts in NAV, and the presentation, everything looks fantastic. The increasing dividend, the increasing production. What in your opinion, what's that? What's holding that back? What's that discount coming from?
Oh, that's just a tough question. Yeah, I think previously we had a Tanzania discount. Certainly, sort of concerns over this type of jurisdiction. More and more, we're proving that that's not the case, and I think all we can do, we are a Tanzania business first and foremost, so we are what we are. But all I can do and we can do is continue to demonstrate that actually we have a really solid business, and it's a great place to run a business, and you can see that through the fundamentals. So I think that's part of the reason. I think part of the reason is liquidity. We would like a little bit more liquidity. As I mentioned, we're very well held institutionally, very, very unusually held for a business our size in our sector. But obviously they're holders, and so that doesn't help necessarily on the daily liquidity. And I think possibly some news flow when we can actually start talking about some of the things that we're working on, some of the demand increases that I mentioned. So those would be my real reasons, but it's incredibly downside protected at these levels, given everything I've been talking about.